Let's check in on the market. So we did see a little bit of stocks extending gains, especially when it comes to the Asian trading session. And this is on the back of what appears to be China softening its COVID stance. But we also had comments coming out of Fed Chair Jerome Powell signaling to markets that we could see a slowdown, especially when it comes to the pace of interest rate hikes. But when we look at the dollar performance, falling the most against its group of 10 counterparts, with the yen, of course, speeding to a 3-month high. But it's also quite interesting to see what was happening when it comes to Jerome Powell's remarks, affirming that the expectations that perhaps we might not see the fourth run when it comes to 75 basis points, indicating to markets that 50 basis points might be in line. But what has been, I suppose, the topic of discussion this morning has been what's happening with our local currency. You can see there on our screen, we've given you a 10-day chart just to see how the rand has performed and fluctuated. We did see the rand a little bit unchanged this morning. It had fallen more than 1% in the previous session as investors pondered the future of President Cyril Ramaphosa in office. Earlier today, we saw the rand trading about 0.7% stronger against the dollar than its closing level as the dollar tumbled on global markets. Comments, as I've mentioned, the U.S. Federal Chair indicating that interest rate hikes could be scaled back as soon as December. The rand did manage to recover some ground about a couple of hours ago after weakening in the previous session. As it stands right now, rand trading at around 17.45 or so. But what's also quite interesting is that because of the weaker rand performance, we're seeing our financials also lower as well, down about 2.4%, and banks and the financials generally don't like a weaker rand, especially if that weaker rand has to do with political instability. ABSA, Nedbank, FirstRand, as well as Capitec, both lower. But to talk to us about the latest when it comes to market developments, we are joined by Jones Gondo, who's a senior research analyst at Nedbank CIB. Jones, thank you so much for your time. I mean, there's a lot happening this morning, especially when you look at global market sentiment. But how's our market reacting to some of the political news that's unfolding?
Hello. So I think it's been a lot to digest this morning. I think the overhang from last night's Jerome Powell speech sort of gave a rallying impetus into the start. And then obviously it's now started to take on the uncertainty of what happens at the level of the presidency in the country. And it's not yet into binary action. I mean, if we do see a leadership change, it's hard to say whether that will be positive or negative. It's just about how it could happen. And I think the market is trying to digest scenarios.
The one thing, I suppose, when you bring in what the market is trying to do, or, digesting scenarios, you look at the announcement coming out of NAMPAC this morning. The market's certainly not liking that, given the share price performance. Let's unpack that a little bit.
Yeah, look, this is a bit of a long story with the company that has been struggling with deleveraging from debt that it had taken, which was in US dollar denominated debt. They operate in a number of countries on the continent, which consumes US dollar funding. And I think where they came to is that they announced that they want to do a rights issue to try and use that to pay down debt, near-term debt that's coming, so over R1 billion worth. And they also need money for working capital to invest in plants and just to respond to the dynamics of demand and supply. We know that a lot of these companies as well, from an input side, have had pressure given supply chain issues that came out of COVID. And so I think it's just the market capitulating, saying their self-help initiatives just weren't fruitful, really.
But then we also had Sasol reporting that its first half profit would rise by more than 20%, boosted by higher international oil prices and a weaker rand. However, that share price also down about 4.9% right now.
Yeah, so their trading statement was quite the opposite, right? To Nampak, it was actually a really good outcome for the year-end trading statement. But I think at the end of the day, we still also see a lot of supply side or operational issues creeping in that has to do with coal supplies and getting the chemicals businesses ammonia to market, given the force majeure from Transnet. And that created a force majeure for themselves. And so I think generally trading going forward is going to be still a bit of an overhang on the logistics and supply chain side. And I think really also it's just responding to sentiment on the day-to-day around issues of the presidency and leadership. We can see that correction in the rand, and that translates into the price as well.
Given the comments that we've had, from some of the Fed presidents, as well as, tie in with the remarks coming out of Chair Powell and the market reaction attached to that, are you expecting some kind of Santa Claus rally?
Well, it's actually kind of difficult to say. So Santa Claus rally, I think the November sort of data from Black Friday is really a good indicator that it was surprisingly robust abroad and in South Africa as well. But we do know households are starting to turn to try and deleverage and take a more cautious view. We have to take stock of the fact that the really rapid rise in rates is now starting to hurt. It's now starting to creep in. It usually has about a 6 to 9 month lag, and so now is the time that I think households are better positioned to tighten the belt a bit into December, and we might see that into the numbers. So I'm a bit cautious about any Santa Claus rally, and particularly for non-essential goods.
All right, Jones, let's leave it there. Thank you so much for your time. That is Jones Gondo from Nedbank CIB, giving us his perspective on market developments and also touching on the rand's performance. It is something that we're going to be looking at, market reaction, bond market reaction as well over the next 24 hours, just to see what does unfold on that front. But that is it for me. We're going to take a quick break. When we come back, Nompumelelo Siziba will be with you.